The 1-minute gold chart is a high-stakes environment. Tiny price movements compound rapidly, triggering massive avalanches of financial gain or wiping out poorly protected accounts in seconds. Most retail traders fail here because they try to guess where a breakout will happen. They jump in early, hoping to catch the bottom, and end up chopped apart by false signals and reverse trends. To survive these rapid shifts, we rely on a strict two-part mechanical system. It is designed to identify real momentum and capture explosive runs. We're layering momentum detection with a volatility-based exit strategy, creating a mechanism to trail explosive moves for as long as the market provides the volume. Survival on the 1-minute chart requires abandoning human intuition entirely. We trade based on reactive, unfeeling mathematics. Step 1 is setting up the baseline. Open a high-contrast 1-minute chart for gold, ticker symbol XAUUSD. Next, we add the first engine component, the Commodity Channel Index, or CCI. You need to configure this specifically to a 20-period cycle. This split-screen chart contrasts two completely different trading philosophies. On the left, traders use standard RSI to predict safe reversals between strict boundaries. On the right, our CCI approach is designed to be traded directly into momentum extremes. We want to be on board when price violently breaks the ceiling. Step 2 is adding our exit mechanism. We apply the average true range, or ATR, and set it to a standard 14-period cycle. The ATR does not track trend direction. Its sole purpose is to measure pure market volatility in real time, calculating exactly how far price is moving minute by minute. By combining these indicators, we track the current intensity of the move alongside the specific volatility of the 1-minute candle. This technical interface shows our exact condition for entry. You enter a buy order only when the CCI line physically breaks and completely crosses the positive 100 threshold. For a short, you wait for a break below negative 100. Do not anticipate the break. Entering even a fraction of a second early exposes you to false traps, like we see here where the line dips short of the axis and snaps violently back into the safe zone. The execution protocol is absolute. You trigger a market order the exact millisecond the numerical threshold is breached. Immediately upon entry, execute your defensive maneuver. Place a strict, hard 10-pip stop loss directly behind your entry point. This caps your maximum downside risk immediately. A 10-pip stop provides a narrow window for failure, positioning the account to capture the full distance of an algorithmic momentum burst. This precise trigger mechanism ensures your capital is deployed only when maximum institutional market velocity is mathematically confirmed on the tape. Identifying the breakout is only half the strategy. The primary reason scalpers struggle is because they often cut winning trades early with static profit targets right as the trend accelerates. This dynamic equation shows how we manage the trade. We take the live fluctuating ATR reading and multiply it by exactly 2. This generates a custom trailing pip distance metric. As the price column expands, the 2x ATR trailing stop automatically adjusts. It ratchets your safety line upward based on gold's immediate localized volatility. This calculated mathematical distance gives the trade room to breathe. It explicitly prevents standard micro-retracements from stopping you out, keeping you anchored to the runner. The result is an asymmetric risk-to-reward ratio, a fixed 10-pip risk versus an exit that only triggers when volatility forces it. This system relies entirely on a violent flood of liquidity. These conditions only exist during major market opens and global economic events. The optimal trading windows for this engine are specific. Run the setup during the New York Open at 8 a.m. Eastern, the morning US and London overlap, and high-impact news releases. Never deploy this system during the Asian session. The tight, low-volume chop will produce continuous false breakouts that mathematically bleed your account dry. Pinpoint extreme momentum detection on the 20-period CCI. Execute with ruthless immediacy the moment the threshold breaks. Then, trail the ensuing chaos purely by the ATR numbers. Successful gold scalping involves reacting to institutional momentum through a rigid mathematical framework.